Guys, good morning. April 7th, 2020. It's Tuesday, and man, this is going to be an awesome Tuesday. And here's why. Not very often do we have such a bullish-looking market under such a negative context. And that typically does not last. So, considering the type of discrepancy or divergence, if you will, that we're getting between the markets and reality, yet again, this presents us with a crazy, insane opportunity to short the hell out of this market. Now, be careful what you choose to short, because I'm going to show you a couple of things that you actually want to wait on based on the type of charts that are developing on those two things that actually may stay bullish despite of what the market is doing. So, we are at the top part of the trading tunnel. Anytime we get closer to the upper part of the trading tunnel, guys, what do we want to do? It's basic stuff. We want to buy puts, especially when certain pre-existing conditions are met. So we're going to take a closer look at that. Possible failed breakout in gold and Amazon. What? But they look like they're about to go to the moon, Leo. What's going on here? Guys, wait for confirmation to either get really bullish on these things, potentially buy some puts when these things bounce. So far, as you can see, we put Amazon and gold in this purple color, meaning we are watching this. We are watching further developments in these two things. Now, we definitely want to short the hell out of Tesla on bounces. Here's what's going on, guys. As far as Tesla is concerned, it's a very simple trade. If you study the history of Tesla, it's got a super strong correlation when it comes to Tesla making certain announcements. And this week, the market is expecting Tesla to make an announcement about a Model 3 that is going to be powered with a higher range capacity. Instead of going like 400 kilometers, or it would be, I guess, a couple hundred miles, instead of that, it's going to go entire 400 miles on just one charge. 409 miles to be precise. So this is sort of a cool development, but as we know what happens with all cool Tesla developments, the market gets super hyped up, and once the announcement is actually made, the Tesla shares drop like a rock. So we're likely to see that this week. Now, on one side, you could say, okay, but what about its competitor, NIO, that's out there in China that actually had a good delivery number today, delivered 117% despite of all this craziness in China. So considering that Model 3 is coming out in China, if the news aren't good, do you still think it's going to drop? Yes, the answer is yes, because if you study the history of Tesla, guys, what seems to be positive actually kills the stock. And history, I would stick with history on this one because there's over 90% probability that on good news, Tesla is actually going to drop. So with that said, SPY, we want to buy puts on bounces on the overall market. We definitely want to short the hell out of Boeing. There's huge divergence, guys, between the airline travel sector and between the reality right now, and we want to take advantage of this disconnect. So literally yesterday, Boeing announced that it's shut down its production of everything it was making in South Carolina. And it's got a pretty huge facility in South Carolina, guys. So considering that, you know, it's shutting down everything, on that news, stock managed to actually stage a pop. So if it continues any sort of pop bounce here, guys, you definitely want to short Boeing because it's likely heading back to $100 or closer to that level. So pre-market trading around $150, guys, it's a huge opportunity. So let's say the market opens and bounces to like 160. Buy puts on Boeing in any area around $160 because it's got about 50-point move lower it can actually make from there. So Zoom, guys, here is probably the favorite trade of the day. Zoom is gonna zoom lower, and as far as the target, guys, currently pre-market Zoom trades about $120. As far as target on Zoom, we think it could actually drop below 100. Yes, crazy opportunity on Zoom, considering the fact that with VIX hesitating to move higher, hesitating to move lower, the option premiums did deflate. So anything you buy today is actually positioning you for a great risk-reward opportunity. And our favorite on the list is Zoom. Now, LK puts, LK Drummer is fixing to unveil further. They're being bombarded with lawsuits, all sort of things. There's no reasons to be buying calls here. Just stay firm with LK puts. and your profits will grow. I mean, congratulations those of you that were buying puts with me on this thing on Friday and yesterday, Monday, guys. All of them positions are making some really, really good money. Actually, LK was one of the easiest positions on Friday. The $6 strike puts, we're buying them for 19 cents. Later in the day, we're worth as much as 60 cents. That's a 600% return, guys, within a few hours. So with that said, situation for LK will remain to be highly bearish on that. The stock could still hit about $2. Now, with that said, let's take a look at what's going on with the trading tunnel, because understanding this is key if you're trying to evolve into a better trader, day trader, swing trader. So this was our trading tunnel for some time. Yesterday we said, okay, if we break a certain level, we could go to 26.91. But pre-market, looks like we're trading at 27.20. So how do you actually interpret this information? Okay, important to look at the context of, okay, is it just simple overshoot situation, or is it something that's going to hold and continue to move higher? And when you look at that, it's important to take a step back and take a look at some longer time frame chart. So this is a 5-day chart, right? And if we pull up a 10-day chart right here, on S&P 10-day chart, 30-minute time frame, well, we got a situation where in the last 10 days, guys, we went from 22.30, okay, bounce, drop, but overall, last couple of days, I mean, here we are pre-market, Jesus Christ, 27.30, 27.40 pre-market, guys. That is not likely to hold, because at this point, if you calculate the traveling distance from here all the way to here, we're up 22%. Now, if you also combine the March 23rd lows, we're even, you know, higher percentage-wise of a bounce, like closer to 24, 25% from March 23rd low. Guys, this is not sustainable. Any move that happens either to the downside or the upside within an insanely short amount of time is not likely to be sustained. So just understand this very basic fact and try to use that to your advantage. Now, how low can we go? I'm going to look at another chart, but just overall, considering how the market's been playing in the last 10 days with this level of 24.50, this could be a resistance level, you know, for some time, maybe for the next, you know, 2 weeks, 30 days. Don't expect the market to actually drop below 24.50. So we got about 300 points here that we can literally utilize to our advantage. And again, the trading tunnel has shifted a little bit from where it was, so it's important to take a note of that. But overall, use this level of the yellow line. The yellow line would coincide with a level of, you know, 27.40 roughly. Use that as a line. It coincides with this level right here. Okay, and over here you got a very strong resistance level, so it makes it very safe once we hit these levels to actually scoop up puts, especially when the whole market, their psychological clock is reversed to the point where option premiums are deflating, so you can actually buy puts at a really good price right here. And don't expect necessarily the market to reverse like right away, but if you just stay patient, right, over the course of 48 hours, we're going to be lower than we are here right now. Now, don't discount, we actually allocate a high probability of a move 2 for today, meaning when first hour of the trading session, we could easily reverse. So we may not actually have to be here. We can sort of just touch that yellow line and then reverse lower. Now, 20-day chart, if you take a look at this, right, basically this is our trading tunnel now between 24.50 and 27.40 area. This is your trading tunnel, and basically you want to short stuff. You want to short the market when we get closer to this line. You want to collect profits when we get closer to this line. Now, don't expect necessarily for us to get back to this line within like the next day or two. This would be more like a 10-day target, right? Since we're in a 20-day chart here, this could be a 10-day target or 5-day target, something like that. Just don't expect us to automatically go back to 24.50 like today, tomorrow, or Thursday. What you want to do is give your options a little bit of time if you're targeting this level, or if you're targeting the reversal, basically you want to consider a level out of which we broke out recently, which was about 2,600. So you got about 140 points of room on the S&P futures to give you some good entries and exit. Now, overall, if you take a look at this, another way to break this 20-day chart is this V formation, also a reverse head and shoulder. I've talked about this formation yesterday before gold actually rocketed higher. But at this point, it's important to understand that this V formation is created. We already get a breakout. Because we're running to this resistant level, we may take a step back before running another attack at this level again. So sort of expect a pullback Where? Well, the worst case scenario, 2450, pullback possibly very likely to 2600 over the next 48 hours. So pullback, followed by maybe a reattack of that level. But depending on what happens with the oil deal this Thursday, everybody's expecting an oil deal, but we don't think it's likely to take place. So if oil deal falls apart, then we can easily reach the level of 2450 with a bit of an acceleration. We could be getting there a little bit sooner. Now, here's with this reverse head and shoulder formation, which is technically a very bullish pattern, is pointed out in gold. All right, what we are saying is yesterday we pointed this chart out, and then gold actually rallied above 1700 and was trading earlier today as high as 1720, but then it surrendered some gains. So currently pre-market gold is right at 1700. What you could see in setups like this is overall this is a bullish move, but it could go sideways. So buying call options right here, if you buy short expiration, could be dangerous because they can get decayed real easily. So just a lot of times we want for this breakout to happen immediately, but a lot of times what will happen is we're going to go sideways before breaking out higher. Now, at the same time, when you see a chart like this, we don't want to short it. We don't want to buy puts. And for that reason, okay, it's important to understand why you don't want to necessarily go and short Amazon. As you can see, it's got the same chart as gold right now. If you take a look at other technology stocks like Google or Facebook, they got an entirely different setup. They all headed into a death cross formation. Not so with Amazon, okay? After it created this reverse head and shoulder formation, or if you want to look at it another way to look at it, is a strong V formation, okay? This stock is really positioned to break out back to these all-time high levels, which is a huge divergence, right? This stock is being so reluctant to drop, you know, when you compare it to the rest of the market, that this formation could actually hold. Now, again, should we expect Amazon to go 100, 150 points high from here? No. You know, meaning like today or tomorrow, the answer is no. We could go sideways for some time, meaning could it go maybe to 2040, 2050, reverse back to 1980, like it could be going sideways for some time, ultimately followed by a breakout. Now, the bigger breakout could actually come in when the earnings announcements come out, which is going to, you know, we're only about 3 weeks from that. So with that said, Amazon could just build out the shoulder for the next 2 weeks, and then you could see it really move higher towards that earnings announcement, literally like 1 week before earnings. We could see a huge move in Amazon higher, and it could actually, after the earnings report, could actually break to all-time highs. So the conditions are highly favorable. This is a highly bullish chart pattern. I just don't want you guys to mistakenly just get super bullish observing the chart right here and expect a huge breakout right now, because there's a high probability of actually going sideways for some time in this overall bullish pattern. At times, we can get a fake breakout in patterns like that, and knowing the history of Amazon, they're actually notorious for staging false breakout, so we shouldn't discount that probability at the same time. So fake breakouts actually create really lucrative opportunities to buy puts, but at this point we're not suggesting buying puts on Amazon. We'd rather see this chart develop a little bit further, observe the volume and some possible divergence developing here to make the best trading opportunity for everyone. So, but overall, when we look at circumstances like this, and we do get a fake breakout in gold, we do get a fake breakout in Amazon, this actually adds to a huge list of the bearishness in the market, and combining some of these next few factors, guys. We don't have time to talk about every single factor out there, but I'm just going to bring a couple of factors which should remind you that this is not the market where you want to be a hero and you want to be a bull on short-term time frames, yes. But overall, this is a bear market, and what we want to do with bear markets, we want to short the bounces. So consider this. Pre-market, as I'm looking at my screen, all the airline stocks are up again. And yeah, we did recommend buying calls on them yesterday. The RCL and the CCL calls ended up being a huge trade overnight. Okay, but at the same time, we're getting headlines like this. Alaska Airline files for bankruptcy. Okay, so this is officially the first airline yesterday on April 6th that have filed for bankruptcy. Now, at the same time, these bankruptcy announcements coincides with all the travel stocks moving higher. So what the hell is wrong here, okay? Shouldn't they be selling off on news like this? That actually now we're getting this domino effect starting to play out where you got travel stocks and airlines filing for the bankruptcy. Shouldn't the market be taking this as an early sign of what's coming next? And apparently there is a huge disconnect between the market right now and between reality of companies filing for bankruptcies. So this could last for a bit, but it's not going to last for a long time. And ultimately, this disconnect, the divergence, it should resolve to the downside in this particular case. So downside is wide open because companies are no longer buying their stocks back. See, the predominant behavior of the market since 2008 all the way till the recent crash, the market has been strongly supported, not just necessarily by the Fed QE policies, but because of the lower interest rate policies that have been in place. A lot of management has been encouraged to buy stocks back of their corporations, therefore creating artificial support. And I'm actually planning on making a list of stocks that recently have abandoned, and there's actually a lot of them. My goal is just not going to be to look at the stocks that are abandoned in buybacks, but to see which stocks historically have been buying the most consistently. If they stop doing that, clearly creates a lot of headwind for them to move higher. Just off the top of my head, one of the companies that have been consistently buying stock over the years, pretty much every quarter, is AZO, AutoZone. All right, so I'm going to try to do further investigation. Guys, feel free to send me an email if you find any related information. But this could be a huge, huge trade. Basically, AutoZone, if it stops buying stock back, a lot of these artificial demand that has been created for the stock is going to fall out. And this stock, I mean, from current levels, I mean, it could drop another, $500 from current levels. So phenomenal opportunity could be developing in certain stocks. We're going to make a list of them, and we're going to keep you informed. Now, oil deal this Thursday, guys, again, not likely to happen. The market is super bullish. Oil went from 20 to 28 within just 72 hours. That, again, is not likely to hold. Therefore, we want to own puts going into this Thursday. Tesla, new wide range Model 3. We've talked about that. Short to bounce on Tesla. Impossible for businesses to keep 100% of their employees if they are only going to be 50%, if they're only going to be doing only 50% of the business. So everybody, for whatever reason, thinks that once we're going to reopen the economy, everything's going to be fine. We're going to get back to doing business as normal. And certain businesses may not open at all. Certain businesses may open and they may be doing only 30% of the business they used to do, especially in the first few months. Some businesses may only do 50% of the business. To be doing 100% of the business, you would have to be literally in the business that actually, would benefit from the current situation. So maybe cloud stocks or something like this. This could be partially why Amazon chart is looking so bullish, because their cloud business is probably doing exceptionally well. Now, with that said, a typical business is not going to automatically regain all the customers back. And therefore, it's going to be very difficult for them to keep their full staff, despite of the loans that the government is giving the businesses to pay for the current staff. Okay, maybe that's going to work for a brief moment, but overall, we're not expecting a quick resolution to the situation. So that is a huge negative for the market. Those businesses that are going to keep their full staff, but they're not doing enough business, well, I mean, they're going to have huge losses. So at some point, they will have to make that decision to let people go. And to let people go, there you go. Here's your loan payments, mortgage industry, auto loans, credit cards. They all suffer from that. So temporary boost of the government providing these loans is only going to be temporary. And so this temporary disconnect is going to create some huge opportunities to short some particular stocks. Next market move with all this information, guys, is a 7 or a 2 with a high probability of a 2 or sort of 11 formation, meaning a bounce followed by a drop. Now, we can get a deeper formation, move 7, where it's going to look like we're bouncing, making a small pullback, bouncing, selling off, and looks like all hell is breaking loose again, but then the market picks itself up. Now, we could get a variation of this, but predominantly we're looking for a move like this, 2 with maybe an 11 behavior where we're opening pre-market with a huge gap up. Anytime we open in the market with a huge gap up, it gives us a higher probability of a reversal. So that's exactly why we are assigning a higher probability to a move 2 type scenario today. So market open, pop a little bit higher, sell off, pop again, and then sell off with a high intensity going through the rest of the day. So the panic is off the max, market is shifting, everybody's getting bullish, but don't forget that we are in a tunnel. Based off our historic analog, guys, we are in a freaking tunnel. So there's no reason to get excited on the bullish side here, because at this point, if we look at the historic analog, we are the equivalent of a upper trading range of the trading tunnel. So what do you want to do in the upper trading range of the tunnel? You want to buy puts, not calls, with the exception of a few stocks that may be creating patterns of their own that are highly bullish, that could be potentially staging some huge breakouts despite of what the rest of the market is doing. So overall rule is this: trade the tunnel, with the exception of a few stocks that are trading in the world of their own. So with that said, here's a potential sequence. So today we're expecting to move 2 after 7 yesterday. Potential 11-6. And guys, the reason why these are not like crazy wild moves that we're expecting, 11-6 overall, basically the market goes slightly higher, sell off by the end of the day or intraday at some point, because again, don't forget about the historic tunnel. Okay, so don't expect some crazy huge 3,000 point moves lower in the Dow in one day, but overall expect the tunnel. So since we're in the upper part of the trading tunnel, expect the next move to be lower, not higher. Yesterday move was April 6, guys. On Monday was a move 7. Simple move, basically the buy the dip. We open as predicted, we make a pullback, they come in, scoop the dip, and they continue that behavior throughout the day. So move 7, 2-day sequence is 2-7. Where they were selling the pops, now they're buying the dips, and at this point the 5-day sequence is predominantly still bearish, 3-3, 8-2-7, followed by what we believe is going to be a move 2 formation. So after all said and done, today should be looking like this. And an interesting thing to consider why we're assigning a move 2 a higher probability than a move 7 today is this. Now, market has made a huge bounce here. Now, VIX could have easily been trading with pre-market already under 40. It could have been, let's say, at 37, 38, but it's not dropping. It's the very fact that we have 2 huge days higher in the markets, totaling close to 250 points, or a little over that on S&P 500, but VIX refuses to drop. So that to me is a divergency on its own. So it should be, VIX should be going lower, but it is refusing to go lower. Now, it doesn't necessarily guarantee of a huge breakout in the VIX. So VIX is likely to be stuck in this trading tunnel between 40 and 50. But with that said, we could still get some huge sell-offs in some individual stocks. So short the hell out of Boeing. Short the hell out of Zoom. Guys, those are all really easy trades. Take advantage of them. Take action. Trade like a rockstar. I'll catch you on the next trade soon. Let's trade.